Hey guys, it's that Dividend guy coming at you with another Robinhood portfolio update. Happy Monday. Hopefully everybody's having a GGD, a great green day in the market. You know, I always wish the best for my viewers and subscribers. So today, guys, we're going to look at the overall portfolio, the metrics, the buying power, exactly where that money came from, the individual stocks and how they are performing, as well as the stocks on my watch list and the prices that I would be willing to purchase them at. So we got a lot to cover today, but let's jump right in. For today, we are up right around $260 or about 0.5%. The 1 week mark, we are up $347, up about 0.7%. The 1 week mark, we are up $1,206.31, up about 2.4%. 3 month mark, we're down right around $990, down right around 2%. Year to date, we are pretty much break even, down $14 or down 0.03%. The 1 year mark, we are down $3,289.80 or down about 6.1% for the past year. So guys, this is just fluctuation in the market, not a huge issue, but let's take a look at how high it got. Right around 55K, dropped all the way down this year to 43. So from 55 to 43, and now we're back at right around 50,000, around $800. Then all time, we are up $15,167.32, up 42.6% all time. Then we've got a buying power of 52.30, and we did get a $36 dividend from Realty Income. Then, of course, we're going to jump in the individual portfolio holdings, and we start off with Realty Income at 61.56, up 80 cents today or 1.31%. We have 143 shares, $8,800 of market value. Average cost is right around $67 per share. 17% of the portfolio is in Realty Income. Today we're up $113 or up 1.3%. Total, we are down nearly $800, down over 8% here on Realty Income. So a nice buying opportunity here for Realty Income, at least for my portfolio. Then we've got Coca-Cola up about 41 cents, up 0.67% today. We've got 10 shares, $634.60 of market value. Average cost is $60.84. 1.25% of the portfolio is in Coca-Cola. Today we're at $4.10. Total, we're up $26.16, up 4.3% on Coca-Cola. This is one, guys, that I do want to add a lot more to, but as you can see, it is way above my average cost, so I'm going to be sitting pretty, just waiting for the opportunity to purchase more shares of Coca-Cola. Then we've got Altria up 42 cents or up nearly 1% today. 315 shares, $14,313 of market value. Average cost is right around $47.40. 28% of the portfolio is in Altria. Today we are up $129 or up right around 1%. Total, we're down $600, down 4%, and a dividend coming in on April 28th of $296.10. So, guys, this is by far the biggest payer in the entire portfolio. As of right now, the best buy for me is T. Rowe Price, so I think that's where the money is going to go, but I will do a video showing you exactly where I end up putting that cash. Then we've got Apple. Pretty much break even today at 165.18. Only one share. Of course, the market value reflects the stock price because I only have one share. Average cost is right around $133 per share. 0.33% of the portfolio is in Apple. Down 3 cents today. Total, we're up $32.52 or nearly a 25% return. 24.5%, but nearly 25% return here on my single share Apple. Guys, the thing is with this company, I want to own a bunch of Apple. I want Apple to mirror or surpass AbbVie in terms of passive income, but that's going to take a lot of capital because they pay a very small dividend right now, which is totally fine by me. I want to build this up and have it be one of the top 3 dividend paying positions in the entire portfolio. That will take a lot of time and a lot of capital, so I'm going to be patient. Like I said, as you guys can see, I only have one share, but eventually I want this to be like 100 shares. I know that's going to be like 165 thousand, but I don't even care. This is going to be one of the bigger positions. Then we, of course, got AbbVie, which is down a little bit today, but not enough to make me worry. In fact, if it was down more, I would be buying and extremely happy. 95 shares of AbbVie, $15,000 of market value. Average cost is $95.19. 30% of the portfolio is in AbbVie. Today we are down around $40. Total we're up over $6,200 or a 69.33% return on AbbVie. And a dividend coming in of $140.60 on the 15th. Guys, the crazy thing is when I first purchased this company about 4 years ago, the dividend was 107. So the dividend has grown 41 cents in 4 years. That's phenomenal. So that's the thing, guys. This is obviously a great performer within the portfolio, up nearly 70%. But keep in mind, I am in this for the passive income. So the more the portfolio grows, yeah, it's great. It's cool to see the numbers go up. It makes me feel good to see that I'm making money in the market. But I would actually prefer it if it was red, down big, down below my average cost, so I could buy the best investment I've found in the portfolio as to date. As of right now, this is by far my best performer, and not only my best performer, but I believe as well my best compounder when it comes to dividends as well. It does not pay as much as Altria, but when you look at the amount of money that I've put into Altria, it's a lot more. So the thing is, guys, the dividend for Altria started at, I think it was 84 cents, so that has risen 10 cents in the past 4 years. This has risen 41 cents since I bought it. So dividend growth wise, AbbVie is actually the best investment I've made, not only for both the capital appreciation and the dividend growth. So I know that Altria is actually the biggest payer, but when it comes to overall metrics, AbbVie by far is the best stock in the portfolio. So I do wish it was down. It's cool to see, like I said, cool to see a 70% return. Nice to I'm just going to let this sit and compound. I would be cool to put more money into it, and I would love to do that. But at these current prices, I'm not bumping up my average cost by 50, 60 bucks a share. It's just not happening for me. Next, we got T. Rowe Price, guys. Up a little bit here, 53 cents today. 101 share, sorry. $11,000, almost $11,500 of market value. Average cost is $121.60. 22.5% of the portfolio is in T. Rowe Price. Today we're at $53. Total we're down almost $800, down about 6.4% on T. Rowe Price. And guys, I will be cost down. As of right now, this is the one that I will be cost down averaging in and focused on the most. Given the fact that some of the positions like Coca-Cola and AbbVie and Apple are so high, I'm not going to be putting any money into them. But right now, the third set of months is the lowest one. It's the lowest paying set of months right now, and I want to boost that up. And T. Rowe Price right now is the best bang for my buck that I've found in the market. So I will be adding more cash to T. Rowe Price, and excitedly, that dividend income should even out. Right now, I'm getting $300 plus in 14710, 170 and 25. 811 and then 160 and 36912. Those are just the different quarters that they pay. So right now the third set of months is $10 lower than the second set. So for right now I'm going to focus on buying T. Rowe Price until the second set of months is the lowest, and then I'll focus on building that up with either realty income. If the thing is, the reason why I'm focused on the third set of months too, guys, is that those two stocks, both being AbbVie and Apple, are up so high right now I don't want to purchase anymore. So T. Rowe Price is perfect because it's in that set of months that pays less, and I want to boost that up. But given the fact that, let's say, in a few months, I have $180 of passive income in the third set of months and I want to boost up the second set, I will be actually adding the realty income if both Apple and AbbVie are not near or below my cost basis. So there's still a good way to boost up every month with realty income if there's nothing that I feel is a good buy. So next, let's look at the stocks on the watch list. Google, with the 52-week low being around 80 and 131 for the high. I want this around, if I could get it around 90 would be great, but even with the $24, $25 upside, I'm still happy with it. It's down pretty big today as well. Look at that, just fell off a cliff. But I mean, relatively, so like that's the funny thing. Right now, this looks bad, like it was way up, right? And then it looked like it tanked within the past week. But if you look at the grand scheme of things, it's not even the worst dip that it's had in the past year. So, not too bad. I would definitely rather buy this company at around 190 to 100 bucks. Next, Visa is at 233, down but not down enough for me. I want it at 190 to 200. So 233 is only like less than 20 bucks off its high. I'm not buying it here. I'm going to sit pretty and wait for Visa to drop down to the levels where I think it is a good buy. And Berkshire, I want it at 300. I'm interested to see what the stock does as the Berkshire meeting approaches. I do plan on being a shareholder of Berkshire Hathaway before the end of the year, though. So eventually I will be buying one of my favorite companies. So they own a huge position in Apple, Coca-Cola, American Express. They own private businesses like Dairy Queen, Geico, and See's Candy is one of my personal favorite business that they own, with Geico right behind it. But yeah, guys, that should round it out for today. I want to say thank you so much for watching. Remember to hit the subscribe button on my channel, that Dividend Guy. And remember, guys, I try to post 1 to 2 videos every single weekday. So if you guys like consistency here on YouTube, make sure you hit that subscribe button. With that being said, guys, thank you so much for watching, and I'll see you tomorrow with another Robinhood portfolio update. Take care.